Oil prices are down and the market's up sharply. Um, oil prices, I'm a little surprised they're down this morning, but the weekend was somewhat uneventful in terms of no further disruption or major escalation in attacks on the Strait of Hormuz. And although for most practical purposes, the strait is still constrained, and there are some tankers making it through, and Trump trying to pull together a coalition of countries to provide safe passage of cargoes through the Strait of Hormuz is providing some hope or relief to oil prices this morning. And at the same time, um, releases from strategic petroleum reserves and other efforts to provide supply, including lifting sanctions on Russian crude oil, which was already out there, but just allows it to flow freely to other places other than China. So that's all given a little bit of hope to oil prices that maybe there's getting to be some control or constraint around the Strait of Hormuz where Iran won't have the ability to block any shipments or continue to provide that element of fear for keeping cargoes from traveling through that strait. And like I said, some cargoes are making it through, which is a good sign. So we're still at around what $95 a barrel here this morning on crude oil prices. And the market's looking forward here, assuming that at some point things do get better. Now, the one thing I want to emphasize is that we're still running a deficit net of everything of around 10 million barrels per day, plus or minus, on a market that supplies or consumes just over 100 million barrels a day. And so that's sort of tipping the balance from, again, we talked about how a year ago or 6 months ago, everybody was forecasting an oversupply of crude oil this year. That's out the window. And that 10 million barrels a day, does that come back? Well, not all of it comes back in the sense that they're not in the US, but maybe in Kuwait and other places. If countries have to turn back the wells and not be able to load that crude oil into tankers or storage or someplace, you effectively lose that for the near term. You can't come back and turn the valve up higher than what it was before. So although you may say, well, yeah, we're running a deficit of 10 million barrels a day, but that oil's out there, and as soon as we open up the strait or decide to let it out of tankers or it's floating on the water someplace, it comes back into the market. That's partially true, but there is some element of some of that crude oil just being locked into storage or underground for the near term. And so when you look at oil prices, December, the contract's at around $75 a barrel. And I think once we sort of make it through this, whether it's 2 weeks, a month, 3 months, 6 months from now, I think we do get a handle around this situation, and it's not a permanent disruption or blockage or anything that for the long term keeps oil flowing through the Strait of Hormuz. So given everything, when we look out further, I think that 70 to $75 a barrel is probably the longer term being out 6 months to a year, the normal price. We're no longer going to be in the $60 to $65 per barrel range that the market was sort of baking in to the valuations and such. I think it's going to be more now in that $70 to $75 per barrel range. And again, the December futures contract for WTI is at around almost $75 a barrel. So clearly everybody knows estimates have to come up for the oil and gas companies. The stocks have already moved up sharply, but net, I'm not selling anything here. I'm holding on to all the positions. I still like the valuations, even though it's interesting. Even though oil's off more than 5% this morning, the oil and gas stocks aren't off sharply. And some of them are even up this morning. Looking here again, you've got C&Q, Expand, EQT, Devon, EOG, Chevron. They're all up slightly this morning. So the market's not getting, concerned about oil being off 5%. I think the market understands that there's been a lot of value creation here already with the realization of these higher oil prices in the 2 weeks that this has been ongoing, and that their estimates have to come up just given where the oil price is likely to be versus what expectations were before on a long-term basis, at least through this year, perhaps beyond this year into 2027, given we're not going to have that oversupply situation this year that a lot expected 3 6 months ago.